Well, morning everyone, and thank you for joining me. This is the Crypto Minute. My name is Russell Shaw, and good morning again to those that have crossed over from the previous webinar. Good morning to anyone who has joined specifically for the crypto. Pleasure to have you on the webinar. If you need to contact me, rshaw@fxcm.com is the best way to do it. Today is Wednesday, it's the 29th of June. I'm just going to bring up our high-risk investment warning. I'm going to keep this on screen for a few moments. And here's our market commentaries disclaimer. And just finally, our references MarketScope 2.0 and tradingview.com. So what we're going to do is we're going to start off with our real interest rates. Okay, and what we're going to do is we're going to change two settings. So the first setting we're going to do is we're going to change the US dollar to Bitcoin US dollar, and we're going to change the correlation coefficient to Bitcoin US dollar, and then we're going to see what is the potential trajectory of Bitcoin, given the fact that real interest rates are now moving above 0%. Okay, or that they are firmly above 0%. But they are probably going to move higher. So we'll just change this instrument right here, and what we're going to do is we just change this to Bitcoin USD. I'm just going to use the FXCM instrument. All right, and so you can see we've got real rates above, we've got the Bitcoin below. Let's just change the correlation coefficient here. All right, so you can see from here, if you are a Bitcoin bull, your heart should sort of be picking up pace now, and your pulse quickening, because this is not good news. What you can see here is, of course, the fact that there has been a distinct locking in terms of the correlation coefficient since real rates went positive, right? So let's just let's go through the timeline of the Bitcoin decline. So on the 16th, I think it was the 16th, 17th of March. Can't remember if it's the 15th or 16th, 16th or 17th. It's let me take a look at my calendar. It would be on the Wednesday. It would have been the 16th. Okay, so on the 16th of March, the Federal Reserve indicates that it's going to undertake quantitative tightening. And then what happens is it takes some time for Bitcoin to adjust. Why is it taking some time for Bitcoin to adjust as opposed to the dollar, which adjusts much quicker? And my interpretation there, again, I'm going to tag on that subject to correction, is because of the war in Ukraine, the crypto market was used to try and escape sanctions by sanctioned individuals, creating some sort of anomaly in terms of the Bitcoin pricing. Once it was obvious that the crypto markets is not going to be an avenue of escape, then I think the Bitcoin reaffirms the correlation that we would have expected, and it's now to the point that we are at an incredible minus 0.92. Now that's very, very strong, very, very strong. The closer we get to -1, the more in tandem the movements are going to be. So what we effectively have here is a massive capitulation in Bitcoin massive capitulation in Bitcoin as we turn positive on the, let's try and get this more accurate. Let's go from there. As we move positive. Okay, and this right here is telling you that the likelihood of Bitcoin having any sort of intrinsic value that can offset this is a reach and still needs to be proven. Okay, because the market's not seeing it that way one iota. It's seeing it completely the opposite. It's seeing that the increase in real rates is a huge indictment on the Bitcoin value. That's the way it's seeing it, because all the money's flowing back into the US dollar, okay, which we saw in our last webinar. So let's just make the analysis complete by bringing in the US dollar. All right. So the US dollar adjustment happened slightly earlier. It happened around about the 16th of March. That's where it started adjusting, which makes sense, okay, because of the forward discounting. Whereas the Bitcoin, I think, was subject to some sort of almost frenzy to escape sanctions. So let's just put in here the US dollar. Okay, so you can see the issue here is that the dollar is locked in at 0.94 and Bitcoin's locked in at 0.92. That's really bad news. Now, let's take this a step further, and this is something that is in our Q3 report. However, it's only in the Q3 report that compliance allows it to be. So we're running, we've had to take Bitcoin out of some reports because some reports are regulated by a body that's saying Bitcoin is only offered provided you're a professional trader. That's UK, right? So if you download the UK report, you won't find this. But what you can say now is, okay, let's take a look at Bitcoin intrinsic value. Like, how can we get some sort of measurement on its actual value, its actual intrinsic value as a store of value? So we're going to do, I think, a really cool analysis here to make a point. But I just want to run through some mathematics with you prior. Just bear with me because it's going to make a world of difference. So we're going to use two instruments here. We're going to use XAU to the USD, and we're going to be effectively dividing that by Bitcoin to the USD. Okay, so but now what we've got to understand here, okay, is the mathematics behind this. So effectively, you're looking at XAU, okay, over USD, okay. Okay, that's this, let's call it a term, that's this term. Then we're going to have divided by, so we're dividing that term by, okay, Bitcoin over USD. So I think everybody follows this. I think everybody follows this. Okay. So we've got this over here, okay, is exactly this over here. I think everybody understands that. This over here is just represented in a slightly different way over here, okay? Now this is actually as follows. It's this. XAU, okay, divided by USD. So that's the numerator. Okay. Then what we're doing now is we're going to multiply. You guys can remember sort of your high school math, or it would be effectively USD dividing by Bitcoin. Do you guys remember that? So mathematically, where's my arrow? This is the same as this is the same as this. They're all the same things. Okay. This is the same as this is the same as this. Why have I gone to that? Why have I gone to that length? Because effectively it means we can cancel the US dollars. Okay. So ultimately, this is where this is headed. Ultimately, when we do a relative strength analysis of XAU USD over BTC USD, what we're actually looking at is this mathematically, because the US dollars are going to cancel each other out. So that's what we're going to look at. XAU to BTC, and we want to see, well, let's compare their intrinsic values. Which one is the market valuing higher? Okay, so that's what we're going to do. So we're just going to go like this. Here's gold. And divide that by BTC USD. Okay. All right, let's make this a weekly. Put a longer term view. Let's make it logarithmic, because these are prices, so we can make it logarithmic. And now we've got something that is very workable. We can start applying technical tools to this. So the first tool we're going to add in is a stochastic, just to see where the momentum is, right? Let's throw that in. All right. So our stochastic is a measure of momentum. There's no such thing as overbought, oversold. It's pure momentum. And you can see that we are now in the upper quintile of gold. So whilst let's just understand what I'm saying here. So whilst gold is certainly at risk, it must be at risk if real rates have turned positive. The fact of the matter is the market is still recognizing that it has some value because it's completely obliterating Bitcoin. Okay, and the way we can also look at this is that we can just take a look at gold to the US dollar chart and see that gold to the US dollar has held up relatively well, all things considered. So you can see that the momentum here is firmly in the favor of gold. Now, what we can do is we can add in an RSI. I think it would only be fair to add in an RSI just to see how overbought we are, and perhaps you know the gold to the Bitcoin value is a little overdone. So maybe there has to be the way that this will get resolved. Remember, this is a relative chart, so we're looking now on a relative basis between two instruments. So the way that this will get resolved is there's only two ways. Either gold has to capitulate, or Bitcoin has to move up relative. Okay, my expectation is that perhaps gold capitulates a little bit more given the real rate. That's what I think, but that's subject to correction. In all honesty, that I really don't know where the correction is going to the correction is going to take place here. But something does have to happen in this relationship. But I think that's sort of a side issue because we're looking at it on a relative basis here, not on an absolute basis. So let's take this out. What we can see is that there is certainly a complete outperformance, complete dominance by gold over Bitcoin. They're not the same things in the least. They are remarkably different. And what we can do here is we can also throw in a 30-week exponential moving average which is of course Stan Weinstein's moving average, right? So let's put in an EMA. And we're going to make this a 30-week. And then we'll throw in the just the stage analysis, just to complete it. All right. So in terms of the stage analysis, this would be a stage 4 distribution. Where am I getting this from? You can pick up Stan Weinstein's book. It's an old book. It was written in 1987. To me, it's still one of the best out there. How to Profit in a Bull and a Bear Market. It was the first book I ever read on the share market, and I didn't realize just the how powerful the information was in that book. And so, if I just kind of appreciated, I think I would have been had a much stronger base. So we've got a stage. Sorry, this is not a stage 4. This would be a stage 3 distribution. Okay. Then we've got a stage 4 markdown. All right, and then what subsequently happens after that is we've got a stage 1 accumulation. And we've now moved into a stage 2 markup, which you can see because we're above the moving average, and that moving average has rolled up. It's pointing up. Stage 2 markup. Okay. So we've got a certainly we in stage 2 markup with strong underlying momentum. The one sort of aspect which I want to acknowledge, I can't quite come to terms with it. If any of you guys have ideas, let me know. But the RSI does seem that it needs to correct, which I'm not sure how that fits in with the Weinstein model and the stochastic. Something's got to give you on a relative basis, not on an absolute basis. Okay, on a relative basis, that's very important to understand. A relative basis means two instruments can be going down, but if one is declining at a slower pace than the other, that's still a Mark II, stage 2 markup. Okay, on a relative basis. So just understand this is all relative, not absolute. So I just got to think how that adjustment will take place. But there's just simply no argument to be made that Bitcoin is a store of wealth. The Weinstein technical model puts that to rest. It doesn't mean that Bitcoin cannot become a store of value, but I think that the market wants it to prove itself. So that's where we are with regards to Bitcoin. Let me just take a look at some comments here. Yeah, all right. And then how just ask, can we just do just a black and white sort of plain technical analysis for Bitcoin? And I think that is obviously the perfect way to conclude this webinar. So we can see that the relative values between gold and Bitcoin. Let's take a look at Bitcoin itself now. Okay, so we just go through now to our weekly chart. This is now absolute analysis. Okay, nothing's really changed up from last week. We've still got the lower peak followed by the lower trough, and we've still got a very dangerous looking stochastic, where it's positioned in its lower quintile. Now, we must understand that the stochastic is purely momentum, no overbought, no oversold. If it hangs around this 20 area, that's going to devastate Bitcoin. What we can do is add in an RSI just to see if there is a floor beneath us at the moment. So we can throw that in. And whilst we're kind of tending there, you know, we're tending there, we're not under 20, so there's no oversold reading at the moment. Let me just throw in my legend here so you can see. So we're at 20.98, so we're talking about 20 or below. So yes, it's tending towards oversold. You know, it is pretty close to being oversold, but we're not quite there yet. All right, so that's something just to consider there. We go through to our daily analysis, and what's happening here is, let's zoom in, is that we've got, okay, we can get rid of this, I think. Okay, let's get rid of this. The squeeze has happened. We've had the expansion down. You can see the momentum right away is in the lower quintile. That is dangerous. Look at the price. We're about to break below 21. What would expect now? If we don't, if there's going to be some sort of fight by the bulls here, you know, that's clearly what could happen. We have support, but this momentum needs to come out at 20. So if they're going to defend the 20 level, we really need the momentum to come onto the bull side. Otherwise, they're really fighting a tough battle here. But what I'm concerned about is really the what I'm concerned about here is really the reference candle. Okay. So you can see that yesterday's candle is also, it's not a comfortable looking candle for a Bitcoin. We've got now the highest high on Monday. That's condition 1. Condition 2, 3 yesterday. It takes out Monday's low and closes below it. So this is a potential lower peak that's now charted. Potential, because we don't know, but if it is a lower, if it does prove to be a lower peak, well, then there's another leg down. So there's kind of an if-then situation. If this is a lower peak, then we're going to have another leg down, which I think is distinctly possible considering where the stochastic is. Okay, so and that 20 level is absolutely psychologically key, I think, for this instrument right now, because it's been fighting tooth and nail since the 15th of June. So for over 2 weeks, has been fighting to keep this 20 level. You know, so it's really we've just broken below it. Okay, so have we just broken below it? Yeah. So we just broken below it. So the idea here is we've got to be very concerned. Now we go through to our hourly. And of course, you've got a crossover there. Hourly momentum here is looking very fragile. There is perhaps some respite because we are at S1. We are at S1, and perhaps, just perhaps, some sort of oversold position. So perhaps the S1 holds, but again, I wouldn't be too comforted by that. Then we get the bulls defending the 20 level. We go to the central pivot. Bear's just going to launch another attack at it. Okay, so there is a really sort of precariousness here. This, I think, has to also be tied in with last week's Remember last week we talked about, I think we talked about capitulation. I'm not quite sure we've seen the capitulation. It hasn't been released yet, Rob. I'll let you know when it's been released. I'll let you know when it's been released. So Rob's asking when's the Q3. So it's probably by the week, the end of the week. But so the actual final document's still in design. So all the information's there. It's just a matter of just getting the document put together in a really sort of professional looking way, and then they'll get it up. All right. All right. So that's, I think so. So we can kind of think about I'm not sure we've seen the capitulation here. I think there's still too much, dare I say, bullishness with the Bitcoin. I think I'm just going to end off with a story that I read over the weekend. So I pulled it out. I've got a copy of a book. It's a really, really interesting book. If you guys can get a copy of it, it's called Extraordinary Delusions and the Madness of Crowds by a guy named Charles Mackay. And basically he writes about all the bubbles. And if you take a look at Tulip Mania, a 12-hectare farm was once sold for a tulip. With that, I leave you guys. I invite you to email me, and we will catch up again tomorrow. Thanks very much, guys.